Navigating the unregulated world of merchant cash advances. Introduction. Decoding merchant cash advances. Merchant cash advances, MCAs, have emerged as a popular funding choice for many small businesses, largely due to their quick access and minimal procedural requirements. Unlike conventional loans, MCAs are unique in that they involve the sale of future receivables. This key difference exempts them from the usual loan regulatory framework. This article aims to demystify MCAs, highlighting how they differ from traditional loans and the regulatory landscape they operate within. Regulatory landscape. MCAs as commercial agreements. MCAs are not considered loans but rather fall under commercial transactions. This classification stems from their structure as a buy-sell agreement, where businesses trade a part of their future revenue in exchange for an upfront lump sum. This arrangement circumvents the traditional loan regulatory system, freeing MCA providers from usury laws and standard lending regulations. Consequently, MCA providers enjoy significant freedom in setting terms and conditions, often to their advantage. Merchant impact. Navigating in regulated waters. The lack of regulation in the MCA sector poses considerable risks for merchants. Without the protective measures typical in standard loan agreements, business owners may face stringent terms, high factor rates, and aggressive recovery tactics. This can lead to a debilitating cycle of debt for many businesses. Moreover, the potential for ambiguous contracts and hidden charges can exacerbate a company's financial strain. Therefore, approaching MCAs requires extreme caution and a thorough understanding of their terms. My personal experience underscores the urgency of taking action against the aggressive tactics of the unregulated merchant cash advance (MCA) industry. In their initial collection stages, these companies may employ intimidating methods, such as threatening to contact your clients and family or harassing you via text. They can even garnish funds from national bank accounts like those at Bank of America if the bank operates in their charter state. Moreover, they can seize funds from merchant accounts and money transfer services like Stripe, Venmo, or Cash App, due to their national reach. Here is a real-life example of a text a MCA company sent to a customer of theirs. He had defaulted, asked for a lower payment, and to wait a month because his income had dropped. Prior to him filing suit against the MCA company, this is what they would send him: similar text to his clients and family members. JXXXXX, we are sending out a quick track enforcement team to your business and home address to gather an organized list of assets. This is needed to initiate the process of monetizing the assets you pledged under your security agreement. Please reach out to me to schedule a time. If no time is scheduled, they will arrive unannounced. Also, today I initiated the process of freezing and attaching your bank account. Thanks in advance. Global Solution Biz XXXXXX4X case number 2023XXXXX. JXXXXX. It appears you are unwilling or unable to resolve your legal matter voluntarily, and we have no choice but to move against you and your business. XXXXXX4X Global Solutions UCC Lien Enforcement Division. Case number 2023XXXXX. The Fair Debt Collection Practices Act, FDCPA, makes it illegal for debt collectors to use abusive, unfair, or deceptive practices when they collect debts. This includes repetitious phone calls with the intent to harass, the use of obscene or profane language, and threats of violence or harm. Enforcement team. Move against you. Seems a bit unnecessary. Prior to a lawsuit and getting the court involved, you are subject to outrageous collection activities. When you receive a message claiming that a merchant cash advance (MCA) company is sending out a collection team without having secured a legal judgment, it almost borders on the ridiculous. Without a court judgment, they have no legal standing to enforce collection. As I understand from my own experiences and legal advice, they are not legally permitted to collect from you in your state just because their agreement says so. They need to first obtain a judgment in the state where their entity is registered. Following that, they must secure what is known as a foreign judgment in your state. So, what does this actually mean? It means they can't just show up and seize your car, personal belongings, or company equipment. Such actions would require a ruling from a judge in your state confirming the amount you owe and establishing that the debt is indeed yours. Only after such a legal process can any legitimate collection activities begin. In essence, the idea of an MCA company dispatching a collection team without going through the proper legal channels is not just unfounded, but almost comically exaggerated. It's important to consult with your attorney for accurate legal guidance, but generally, these threats are more bluster than reality, designed to intimidate rather than reflect any lawful procedure. However, a significant shift occurs when you bring these issues into the legal system. Once a court is involved, MCA companies are compelled to adhere to strict ethical standards and legal procedures. This includes appointing an attorney who must follow the code of conduct prescribed by the court in both your state and theirs. Their excessive fees are curtailed, and they are forced to charge reasonable legal bills and interest rates, aligned with the usury laws of the lawsuit, a stark contrast to their previous demands of 200 to 300% interest. This is why it's vital to take proactive steps and strike first. By initiating legal action, you transfer the battleground to your home state, granting you significant leverage. This move allows you to challenge their unethical or aggressive tactics, along with any excessive interest rates, fees, and related costs. It's essential to recognize that MCA companies generally want to avoid usury law violations and the potential of incurring a third-degree felony, particularly since some states view exorbitant interest rates as potentially criminal. Therefore, it's critical to take decisive action now. By confronting the situation head-on, you can not only protect yourself from unfair practices but also potentially expose and curb the overreaching actions of MCA companies. Don't wait until it's too late. The power to change the dynamics and protect your interests is in your hands. The necessity for thorough analysis and transparency. In an environment lacking clear regulatory guidance, the onus of due diligence falls on the merchants. It is crucial for business owners to closely scrutinize MCA agreements, fully grasp the terms, and assess the total cost of the advance. Seeking advice from legal or financial professionals can be extremely beneficial in this context. Additionally, there is a growing call for transparency and ethical conduct in the MCA industry. Advocates are campaigning for more straightforward contract terms, fair collection practices, and potential regulatory reforms to protect merchants from predatory strategies. Conclusion: treading carefully in the MCA terrain. While merchant cash advances offer an essential source of quick funding for businesses, they come with distinct challenges due to the lack of regulatory oversight. Business owners must navigate this terrain with caution, fully aware of the potential risks and costs involved. As the industry evolves, there is optimism for more standardized practices and potential regulatory updates. In the meantime, merchants bear the responsibility of making informed decisions and safeguarding their financial health amidst the complexities of MCAs.